So thank you very much. Actually, the Senegalese Sovereign Wealth Fund is more a strategic development fund than a saving fund. It has been created in 2012. At that time, the country has not discovered yet oil and gas resources. So the main mission of the fund was just to invest equity in big projects, strategic projects, and also in SMEs that has the potential to become tomorrow the future champions of our economy. So our clear mandate is, or the vision I can say, is in the long term to be a catalyst for a country economic transformation into an emerging country. And for that, we have been created by law. And in this law, it has been clearly specified that the fund has to comply with the Santiago Principle in order to safeguard its governance. And that's why currently the fund has total operational independence. The management team have an operational independence, and the supreme body for supervising the fund is the board of directors. And the board of directors is comprised with senior civil servant, and the chairman is from the private sector. Okay? And some very important things you have learned on 7 years of experience. The fact that first, it's important to preserve this operational independence. Number two, it's also important to have very clear relation with the state. Any assignment that the state gave to funds has to be clearly documented with a mandate and remuneration. And this is important to give to the governors of the fund the possibility to confirm or to decline this assignment if the assignment, for instance, is not in line with the investment strategy of the fund or with the mission of the fund. Number three, which is also very important for us, is the leverage effect. The fund that never invests alone. We always invest in collaboration, in partnership with private investors, local private investors or international private investors. And that's why so far we have a leverage effect of 1 to 10. It means that for each $1 we invest in a project, we raise $9 from the private sector. And this is very important for us. We know the fact that the resources are limited and we need to amplify our effect in the economy. The last point that is also important is the fact that we are focused on the local market. We just are focused on domestic investment. And contrary, for instance, to the saving funds that are investing abroad. As a strategic development fund, we need to invest in the strategic sectors, we need to invest in the strategic companies, we need to boost the economy in order to accelerate our economic transformation. And regarding the don'ts, maybe, also things to avoid for strategic development funds. The first one is to avoid investing without taking into account economic and financial risk and also the related return. For instance, in Francis, every investment we do has to be validated by our board, and we need to demonstrate its profitability and the social and economic impact. Otherwise, the investment is discouraged. Number two, things to avoid is also executing an assignment directly from the state without a clear mandate that has been approved by the governance of the fund specifically. And number three, also things to avoid is to be in direct competition with the existing financial players. The value proposition of a strategic development fund is to supplement the existing offer of financial services, not just to do the same thing as the existing players. So that's why we are condemned to be very innovative in what we are doing, and sometimes we just try to bring new solutions. And one of the solutions is we have appropriation by the local players. We just step out and let private sector or private players continue the initiatives or the solution. To finalize, I will say also that regarding the key achievements we have so far, and Francis has, after 7 years of investment, we have a majority stake in the National Water Distribution Company. We have invested in the very first PPP in solar project in Senegal, and currently the solar project portfolio represents more than 50% of the national solar capacities of the country. We are a major player, a major investor in the pharmaceuticals industry in Senegal. We are the second biggest shareholder in the biggest pharmaceutical units of Senegal. We are the second biggest shareholder in the unique pharmaceutical units that produce IV solutions, intravenous. And we have also rolled out some very innovative PPP schemes for the health sector, because we truly believe that health needs private investment just to supplement public investments. And we have rolled out some PPP models for the construction of hospitals. And we have also rolled out a PPP model for the construction and the exploitation of medical imaging centers in collaboration with public hospitals. And that's why in the short term, in the mid-term, the prospects are quite promising, because in our strategic investment plan that has been validated this year by our board, we will invest $500 million in the local economy. And regarding the fact that Senegal has discovered oil and gas, the government has mandated Francis to manage what we call the saving fund, which will be the future generation fund. This is a completely different fund, and that's why currently the law that has created Francis has been modified and is under discussions with the government, the parliament, and all key stakeholders, just to see how we will upgrade and reinforce our governance, our organization, and our functioning, so that we can take in charge properly the management of this big fund, which we call in Senegal the intergenerational fund. At the creation of Francis, by law in 2012, the government takes a commitment to transfer up to $1 billion assets to Francis, so that to constitute its initial capitalization. And this is how we take our revenue. It's from asset transfer from the state, but also we can leverage debt in the financial market with collateral provided by the state, if necessary.